morning's edition of the NBC Markets Morning Call, 26th of September, 2025. Headline today, silver and platinum surged to multi-decade highs. Anyone who knows me knows how happy that makes me. So happy Friday. We'll start with equities. We were looking fairly weak yesterday leading into the session, but we managed to recover after sort of a couple of years of hibernation for the materials sector here in Australia, lagging. I think 2024, it was only pipped by a few percent as the worst performing sector by energy. I think they were down 21 and 18% in 2024, and we're starting to see a fair bounce back now, driven by Rio and BHP, but which was largely to do with a mudslide that happened at a Freeport McMoran mine in Indonesia. Mudslide literally wiped out 3% of global copper supply, and essentially Freeport McMoran's been now forced to declare force majeure, which is inability to deliver on their contracts based out of those mines due to a natural disaster. They're saying that mine won't be reopened for deep into 2026, probably 2027, and look, that already we're already seeing green shoots in the Chinese property market. Some form of recovery, and obviously the rapid expansion of data centers is going to have a huge demand on copper. I mean, taking the third backseat would be, the energy transition as well, because all of the new energy infrastructure for all the renewables and things needs to be rewired as well. So I've been a pretty big fan of copper for quite a number of years now. Very surprised it hasn't really rallied too much, but we're seeing the London, particularly the London Metals Exchange contract nearing record highs. Not so much for the US, slightly different situation there, but because they're largely copper independent in the US, and they've obviously got tariffs going on with that. So you've got to watch both of those. The Aussie did still go into strong sell on the daily technicals. We are starting to see the technicals, soften somewhat, but not. Look, we're still strong buys on the dailies and the Nasdaq and the S&P. It's softened a little bit for the Dow, but still a buy, but neutral for the Russell. We're now down for the week. Overall, we've got a few things looming over the market here at the moment. We had bond yields rally last night. We had a jaw-dropping, sort of stronger than expected 3.8% expansion in final GDP numbers, which is the last revision, and I'm actually quite surprised at how much that's moved. That has now, normally this figure is the third, so we have advanced, then preliminary, then final. They're all the same number, but they revise them twice, and I've not seen. I think that was around about the 3.5% mark previously. I've not seen a revision of that magnitude in the past. So, that would obviously be, very much scaring. It would be very much scaring people in terms. It was at 3.3. So that's a 0.5% higher. So PCE's out tonight now, and that makes that number a live number. And that's the Fed's preferred measure of inflation. We've had higher inflation here in Australia this week, and I can't see that GDP number lifting by 0.5% like that on the final revision, and then PCE not rising. So that could be of grave concern, because that's really going to take rate cuts off the table for the US, and we've already had the rally for the rate cuts. So that could really suck the wind out of things tonight. So that was not something that I was particularly looking out for, I must say, with those revisions, because normally they're within 0.1. So let's have a look at the broader map here. Apple was up a little bit on Intel. Apple's up about 7% this week on anecdotal evidence that the Chinese are buying iPhones. Whether that's even true or not, it's a completely different matter. I cannot get my head around how people would buy Apple up here. you know, as in terms of all the great companies around it that have got hyper growth, etc. You know, it's increasingly becoming a dinosaur that needs to be retired from portfolios. Nvidia was largely flat. We saw Oracle drift off despite having a bit of a big tone earlier in the week. Tesla as well, Eli Lilly, Merck. So the healthcare sector getting a little bit hit. I would imagine around Trump announcements, but not a lot of green, as you can see. Oil was up slightly. I would say that would be more on the back of, you know, there is some increasing geopolitical concerns here at the moment. After Trump's appearance at the UN this week, sort of doing a U-turn on Ukraine, and Russia making some moves as well. So that seems to be warming up. I wouldn't say it's heating up. You know, we will probably just see you know, things progress, but you know, there's a lot of talk about these cheap drones coming in and attacking in the Ukraine, and NATO and the US are using very expensive missiles to take them down. So, and I've seen a couple of stories around that. So that could be pretty good for Australian ASX listed electro-optic systems and Drone Shield potentially for further contracts, because they're a lot cheaper option than sending a missile worth tens of millions of dollars. Yeah, and the defence sector generally, I think, is probably, you know, it's got that massive tailwind for the next couple of years. You're fairly safe investing in that sector. That's why we're doing the webinar on it in a couple of weeks. Next week, Carnival, Nike, Constellation Brands. Really the big ones. Tesco in the UK, that's their Woolies, Coles, pretty big company overall. We've got some Fed speakers early on in the week. It'll be interesting to see what they say after this GDP and PCE number. If that PCE number's high, the Fed's snookered. They can't move rates. So I would not want to be a Fed member at the moment, because you're just absolutely copying it from the president and Bessent, and they want rates down for different reasons, and the numbers are just not remotely justifying it. But also PCE, you know, it will be interesting to see where that GDP number, where that strength in that GDP number is coming, because a lot of people have said that the GDP strength was panic buying with the tariffs, etc., because it is that quarter. So it will be it'll make GDP numbers next month, which will be the June to September quarter, probably a little bit more important than usual, because we did have a weak one earlier in the year, and then we've had a strong one overall. So it'll be interesting to see what happens there. But the big show is employment next Friday. After that massive revision down, confusing numbers on GDP, etc., employment is the big dog, and even if we do have a core PCE number that is higher than expected, it could quite easily be put back on the rate cuts can quite easily be put back on the table with a negative employment number, and that could potentially be Trump's fix, as he seems to have got his teeth into the Bureau of Land, Labour and Statistics to start. We're starting to see some of those numbers that he needs to see. Back to my favourite story in the whole world is, and I've managed to get the wrong chart up here, unfortunately, but we had silver rallied another 2.5% overall. We had platinum go up 4%. I'm going to show you a chart in a minute, so we'll just ignore that. Apologies for that. I didn't put those numbers in there this morning. But this is a long-term chart on silver. So gold is the bar chart here, which is on an absolute tear. The purple line is silver, and the platinum is the maroon line at the bottom there. So you can go back to around about 2008, 2009, and platinum was higher than gold prices. And now we're looking at, we're looking at platinum basically only being up 6% over the last sort of, near on 20 years, but since 2008. I would fully expect platinum, particularly. So we have a geopolitical strategy here at MPC with silver and platinum, and we did that in one of our first structured investments, and the main reason was geopolitical risk. And because all of the nations that Trump's picking fights with, and many of the BRICS nations, are the major producers of silver and platinum. So, and look, when you're talking platinum and palladium, we're talking 90% plus. Silver's up there. It's not 90%, but it's up there. Mexico is one of the biggest, but it's mainly Latin America, South Africa, and Russia. Basically, platinum and palladium, it's all South Africa and Russia. So I would expect platinum to start, because it has in the past had store of value qualities about it. Definitely industrial use. Silver and platinum particularly have had massively increasing industrial use. They're used in chips, electronics, etc. The chip makers can't do without them. There's many conspiracy theories out there that the Chinese have been pinning down prices in these two commodities because it makes their manufacturing more expensive. Whether that's it's conjecture basically. So who knows whether that's true or not. But look, they do tend to follow each other. You've got silver starting to go now, and look, as you can see here, this rally in silver in the past, once it starts to go, it goes. So I think we're nearing. It was around about $49-50 for silver. It just breezed through 44 and 40 up to 45 last night, and it's really getting a wriggle on it, and I dare say it will drag platinum along. I believe palladium was up about 8% as well. So very hard to get involved in the stocks as specific in those, unfortunately. But you can buy the ETFs, ETP MAG, which is the silver ETF. It's just physical silver warehoused. ETP MPM, which is gold, is about 60% gold, 20% silver, and then 10% each of platinum and palladium. And ETP MPT, which is platinum, and it's just physically stored platinum. So you can just go with the spot. To be honest, you wouldn't want to go. There's very few miners anyway, but you wouldn't want to go with the miners at this juncture. Because we've had the gold rally. It was better to be in the gold price in the early stages of the rally. I would expect the gold rally to not necessarily reverse, but peter out somewhat. However, this is why our most recent strategy has been around gold miners instead of the gold price. We made 313% on our 12-month gold silver leverage play in structured investments, which expired this week. So we did roll early. We went 3 or 4 weeks early, and we're already up around about the 10% mark on the gold miners and the silver price. So, we'll start to see. But silver and platinum we did around about 4 months ago, and in early June, and they're currently up both around about 40% on each at the moment. So we've been on this trade for quite some time, hence why I'm in a very good mood watching them finally sort of come to fruition. So, look, we'll probably talk about this. There'll be a section in the Security Super Cycle about the geopolitical nature of some of these precious metals, etc. And that webinar is coming up on the 7th of October. So that will be Tuesday week. And do yourself a favor and register there. I would imagine that we might be a touch risk off today, but I dare say the materials sector will lead the way. And it's about time, I suppose. But look, I would be a little bit risk off generally, just in relation to how much those GDP numbers, those final revisions have been moved. And we could see bond yields start to spike. The Japanese bond yields keep edging higher as well. it's going to come to a point at some stage where there's going to be another move in that yen carry trade, I would imagine, if these yields continue. So you maybe just need to watch out a little bit for that as well. I would imagine that the copper stocks would continue to make a move. So yeah, that's where we'd be really, I guess, we'd be really focused today. And there is a lot of talk and buzz out there about antimony stocks. We're in US antimony, and there is a few names out there on the ASX which are micro caps. But have a look out for that, because it may be maybe next in a long line of the US's critical minerals that they go hunting around and trying to take a stake in. So that's why we've gone with the US stock pick. But yeah, there's LKY, TMG, and two names that you can probably have a little bit of a look out for. And the likes of Andean Silver and Polymetals in the silver sector today in the small caps mining. So, but if you want to have a listen to our Bulls versus Bears podcast, Jonathan and I will be recording that this afternoon. It'll be released this evening or this afternoon, just a wrap up of the week generally. And yeah, you can get it on Spotify, YouTube, or Apple Podcasts, iHeartRadio as well. But yeah, I hope everyone has a great weekend and a great day, and we'll speak again.